All right, so you sent over this financial report, and wow, President-elect Trump nominating Scott Bessent for Treasury Secretary. Wall Street seems to be, like, buzzing about it. What do you think? Should we try to break down what this all means for the economy, even if we aren't, financial experts?
Well, the market is always trying to kind of predict the future, but this Besson nomination has, I'd say, made it a little bit cloudy.
The report calls Bessent a deficit hawk. What does that even mean?
A deficit hawk. Well, it's someone really focused on reducing the national debt,
Hmm.
often by advocating for cuts in government spending or sometimes even tax hikes. So Besson's nomination might mean some big changes in how the government handles, well, its money.
Okay, so less like a bird of prey and more like a strategic budgeter. So how did Wall Street react to all this?
The market, well, it practically celebrated. We saw record highs for the S&P 500, the Dow Jones, and the Russell 2000.
Yeah, the report makes it sound like they were popping champagne.
Investors are definitely feeling optimistic. They're hoping Bessent can stimulate economic growth, maybe with policies like tax cuts. They're thinking that'll lead to more corporate profits and investments, you see?
Right, like the skin thing is saying, a rising tide lifts all boats. But
Well, think of Treasury yields, like the interest rates the government pays on its debt, like on Treasury bonds. When those yields go down, it means investors are okay with lower returns for holding those bonds.
so why would Bessent's nomination cause that? I thought the market was happy about him.
Well, that's the interesting part. It could mean investors think Bessent's policies might lead to, say, lower inflation, or maybe they see him as someone who will cut spending, which could actually slow economic growth. It's a bit of a puzzle.
So we've got this market rally, potential changes in policy, and now this mystery about Treasury yields. Does any of this matter to, well, the average person?
Absolutely. Bessent's nomination has global implications. For instance, how he might handle tariffs.
Oh, right, like President-elect Trump's tariffs.
Exactly. But Bessent might view them more as a negotiating tool rather than a permanent thing. That could have a big impact on global trade and the value of the dollar.
The report specifically mentions a weaker dollar and how that could be good for multinational companies. How does that work?
Well, a weaker dollar makes things made in the U.S. cheaper for buyers in other countries. That gives American companies an advantage in the global market. So, Bessent's approach to trade could have ripple effects all over the world.
Wow, it really shows how connected everything is, right? Domestic markets, possible policy changes, and now global trade. It's a lot to unpack.
Definitely. But maybe we should zoom in on some specific sectors the report highlights, like the energy sector.
Yeah, the report said it was the worst performer of the day.
Right. They blame it on falling crude oil prices, apparently because of news about a possible ceasefire in Lebanon. So, world events play a role in this market drama, too.
But it wasn't all bad news. The report mentioned transportation stocks like Union Pacific and FedEx doing well.
That's right. They seem to be benefiting from all the economic optimism and the idea that Bessent's policies will be good for industries that, ship and move things around.
So some winners, some losers, and lots of changes. The report also talks about some upcoming economic data, like reports on consumer confidence and new home sales.
Absolutely. Those reports will be important. They'll show whether the market's optimism is actually, well, justified.
Right, we need to see if everyone else is as happy as Wall Street. And, of course, we can't forget about the Federal Reserve. The report said the minutes from their last meeting will be really important. Why?
Well, the Fed controls interest rates, right? So these minutes will give us a look into what they're thinking about possible rate changes. And crucially, did they factor in any potential impacts from the new administration's policies, even though Chairman Powell said it was too early for that?
Right, because if the Fed thinks the economy is growing too fast, they might raise interest rates to cool things down a bit. It's like a balancing act.
Exactly. And to add to the mix, we also have the Personal Consumption Expenditures Price Index coming out. That's a key indicator of inflation. The Fed will be watching that very closely.
So many pieces of the puzzle, all coming together. But before we get lost in all the data, I think we need to step back and ask, what does all this mean for, the average person? Why should they care about Scott Bessent and his potential impact on the economy?
That's the big question. Economic policies, they impact everyone's lives. They affect things like jobs, interest rates on loans, and even the prices you see at the store. So understanding how these policies might change is crucial for making, smart financial decisions.
It's about connecting those high-level changes to everyday life.
Exactly. And it looks like the report has even more details about specific companies and upcoming events. Want to dig a little deeper? Remember Macy's? Looks like they've run into some trouble.
Oh, yeah, what happened? It's something about delayed earnings in an investigation, right?
Yeah, seems they found some accounting problems. The report says someone, an employee, allegedly hid over $100 million in expenses. Not a good look, especially for investor confidence.
Wow, 100 million. That's not good. Well, shifting gears a bit, the report also mentioned Bath& Body Works is doing great. Their stock went way up after they beat their earnings expectations.
Yeah, it's a good example of how a single company's news can really make a difference, even with all the, bigger economic stuff going on. Seems people still want their scented candles no matter what.
I guess some things are just recession-proof.
Yeah.
Right? Speaking of things people need, what about housing? The report said those big home builders, like KB Home and Toll Brothers, are actually doing well because of those lower Treasury yields we talked about.
Right. Lower yields usually mean lower mortgage rates, so it's easier for people to afford to buy a house. Investors seem to think that even if Bessent's policies slow down the economy overall, they might actually help the housing market.
It's amazing how it all connects.
Yeah.
But then you've got Tesla and Nvidia, both down, even though there wasn't any big news about them.
Yeah.
The report said it might just be profit-taking after their stocks did so well recently.
It's a reminder that the market is driven by, both data and how investors are feeling. Even companies with a good track record can see their stock prices go up and down depending on the mood.
It's like everyone's trying to guess what's going to happen next. So, looking ahead, what else should we keep an eye on?
Well, apart from the economic data we talked about, there are a bunch of company earnings reports coming out soon. Best Buy, Kohl's, Dick's Sporting Goods, Nordstrom. Those will give us a better sense of how individual companies are doing.
Right, with Black Friday and the holidays coming up, those Best Buy numbers will be interesting to see. But going back to the big picture, what about those Fed minutes? What should we be looking for?
Well, the Fed just lowered interest rates, remember? So the minutes will give us more insight into why they did that and what they're thinking about for the future. And maybe, just maybe, we'll get a hint of how they feel about Bessent's appointment, even if they haven't officially factored that in yet.
It's like trying to read their minds, isn't it?
Exactly. But what they do really matters. It affects how much it costs for businesses and people to borrow money, and it can even influence investment decisions.
They have a lot of power, that's for sure. And then there's that PCE price index data coming out.
Yep.
That's a big deal for inflation, right?
Absolutely. The Fed wants to keep inflation around 2%, and right now it seems like we're going in the other direction. So they'll be watching that data very carefully as they decide what to do about interest rates.
So we've got company earnings, important economic data coming out, and the Fed trying to figure out what to do next. Sounds like things could get pretty interesting.
Well, that's the market for you. Always something going on. But that's what makes it so captivating. It's constantly changing, reflecting the hopes and fears and decisions of, millions of people.
It's like this giant complex system, and we're trying to figure out how it all works. The report mentioned that the Fed met right after the election, but Chairman Powell said it was too early to consider any potential policy changes from the new administration. Do you think they really managed to ignore that, or could it have come up in their discussions even a little bit?
That's a good point. Even if Powell said it was too soon, it's hard to imagine they weren't at least thinking about it, even subconsciously. The minutes might show if those discussions happened, even informally.
Even a hint of what the Fed is thinking can have a big impact on the market, like they're holding all the cards.
Exactly. That's why it's so important to understand how the Fed sees things. It's not just about the data itself, but how they interpret it and what they might do because of it.
So we need to pay attention to what they say as much as what they actually do.
Right. It's like they're speaking in code sometimes. You have to read between the lines. But with a bit of practice, you can start to anticipate what they might do.
This is all so helpful. We've covered a lot. Market trends, company news, economic data, the Fed's role. But there was one thing in the report that really caught my attention. It was about the bond market, specifically the two-year note auction.
Ah, yes. The report said it got a lot of interest, even from international buyers.
Exactly. What did that tell us?
It suggests investors are pretty okay with the current interest rates. They're willing to buy U.S. debt, even at these rates. And that's important because the government is going to be issuing a lot more debt in the near future. If investors weren't interested, those interest rates would probably have to go up to attract buyers, and that could have a ripple effect throughout the whole economy.
So strong demand for bonds is a good thing, like a vote of confidence in the U.S. economy.
Exactly. It shows investors believe the U.S. economy is stable and will do well in the future. They're willing to bet on it.
This report has been amazing. We've gone from broad market trends to individual companies, from economic data to the Fed's decisions. And we even got a glimpse of the global perspective.
It really shows how everything is connected, doesn't it? Politics, the economy, what's happening around the world, individual businesses, they all affect each other in these, fascinating ways. And understanding those connections can help us all make better decisions, whether we're investors, business owners, or just living our lives.
I totally agree. But before we wrap up, there was one more thing in the report I wanted to touch on. It mentioned that we'll be getting an updated estimate for the third quarter GDP soon. Why is that update so important?
That's a great question. GDP, or gross domestic product, is basically a way to measure how much the economy grew or shrank during a certain time period. This updated estimate for the third quarter will give us a clearer picture of how the economy was doing before the election and all these recent market movements.
So it's like looking back to see where we came from so we can get a better sense of where we might be going.
Precisely. By understanding past trends and what caused them, we can make better predictions about the future. It's all about seeing the bigger picture.
It's like having, a better rear view mirror so we can see what's coming up ahead.
This deep dive has been really eye-opening. We've covered so much, like those market reactions, the economic data, and all the potential policy changes and company news.
It's pretty amazing how much you can learn from, just one report.
And it feels like we've just scratched the surface. There's always more to discover, right? It's a bit overwhelming, but exciting too.
I agree. It shows how everything is always changing and we need to stay, flexible, curious. That's what makes learning so great.
So true. But let's try to sum up some key takeaways for our listeners. What's the one thing you really want them to remember?
Knowledge is power. The more we understand how the economy works, the better we can make decisions about, well, our money, our jobs, our lives. That's what we're trying to do here. Give you the tools and insights you need to navigate this complex world.
You said it. Understanding things can make a big difference.
Speaking of which, I have one last question that I keep thinking about. The report talked about how Bessent could boost the economy with policies like tax cuts. But how would those tax cuts affect, different parts of the economy? Could some sectors benefit more than others?
That's a really good question. The effects of tax cuts, well, they aren't always spread evenly. It depends on how they're designed and which industries respond the most. For example, companies that currently pay a lot in taxes might see their profits go up a lot, which could lead to them investing more and creating more jobs.
So it's not as simple as just saying, tax cuts are good or tax cuts are bad. It's more complicated than that.
Exactly. It's important to look at the details and understand the potential ripple effects. And that's what makes it so interesting.
This has been a fantastic deep dive. We've covered so much ground. Market reactions, economic indicators, policy implications, company-specific news. I feel like I have a much better grasp of how it all fits together now.
I'm glad to hear that. And remember, this is just the beginning. There's always more to learn, more to analyze, and more to discuss. The world of economics is constantly changing, and staying engaged is, well, crucial.
I couldn't agree more. So to our listeners out there, keep learning, keep asking questions, and keep exploring. Even the smallest insights can help you make sense of the economy. Until next time.